All right, again, I want to welcome everybody in. My name is Mike Rixey. I am the developer and senior options educator at Netpix, and really excited for all of you to join us today for a discussion on how we trade options at Netpix. So over the next hour or so, I'm going to spend a lot of that time over on the charts, taking a look at some trades that we've closed out here recently. We've got some trades in progress at the moment, and then we've also got some trades that are setting up for the rest of this week. So we'll spend a majority of our time over there on the charts so you can kind of see the system in action. I really want this to be interactive, so if you have questions at any point during the session, feel free to type those in, and I will take a look at those here throughout the session. Will Feibel is actually joining me today, helping out on the back end with questions and support, so if anything pops up, he's also going to be helping me here today. So the last week to week and a half, it's been a very active stretch in the markets. A lot of price action back and forth, pretty amazing movement. A lot of it is due to the election results, as we all know, here in the U.S. Going forward, what does that mean for us? I expect things to kind of settle back in a little bit, both with the ranges that we're seeing on a daily basis. I also expect the volumes to start contracting a little bit over the next week or so, just due to the Thanksgiving holiday that is upcoming. So we're going to talk about that in more detail, how that impacts us over the next couple of weeks, really, and for the rest of this year. How am I going to approach the markets? Because as a full-time trader, I can't afford to take a lot of time off. I really want to be active in the markets at all times, and I'll show you some neat things that you can do with options to really help control your risk, where you can stay active in the markets with very little capital at risk. And in my opinion, you can control risk better with options than any other market out there, which you will see over the next hour or so. So why options? I mean, there's so many great markets out there. There's futures and there's Forex, there's stock. Why do we focus in on the options markets? For me, it comes back down to the numbers, the statistics. What area of the market gives me the best odds of success long term? And what we have found, which is extremely interesting to me, we poll many of the people that attend our webinars, and we ask them which area of the markets are they most active in, what markets are they focused in on, and where are they seeing the most success. And we typically see success rates 3 to 4 times higher with our options traders than any other market out there. So if you are active in one of those other markets and you're just struggling to see the success that you ideally want to see, maybe you need to take a step back and ask yourself, are you in the wrong area? A lot of people start out with the Forex markets because it takes very little capital to do so, which is true. But as you'll see today, there's things that you can do with options which are going to give you better odds of success and still with very little capital at risk. So that's why when I started to see this in my own trading a number of years ago, I ended up dropping all of my day trading. Okay, I don't day trade the futures any longer. I actually day traded the bonds a number of years ago. I focus strictly on swing trading with options because that's what gives me the best results long term. And I think what you're going to find going forward as you start to get active in the options markets, if you haven't done so already, you're going to see the same thing. It's just a story that I hear all the time working with traders on a daily basis. It's amazing that so many people see that breakthrough, they see that light bulb go on, and then it's, you look back and you see all the time that you wasted just grinding in a day trading approach. I know that was me for sure, and I've definitely seen an improvement over the last number of years just focusing in on a swing trading basis. Now, a big reason why a lot of people stay clear of the options markets is the complicated terminology, the complicated trade types. And it always drives me nuts when I hear about this from people, because when you dive in and take a look, it's actually not the case. Sure, you're going to have trade types like an iron condor, which it's unique, right? It kind of grabs your attention, and a lot of people will shy away from that because they don't understand it. When in reality, it's actually a very simple trade. There's a lot of unique things you can do with an iron condor. So when you get that foundation in place, it's just like anything else that's new. There's going to be a learning curve there. But once you get that methodology in place that you can trust, the profit potential and what you can do in all types of market conditions, it's truly amazing. It's unlike any other market out there, in my opinion. And I'm going to show you how you can get that foundation in place here today with the Options Academy. So before I get over to the charts, just a little more background information on Netpix. We've been around since 1996. one of the longest standing companies in the financial education industry. I know there's a lot of companies that have popped up here the last few years. We've been around since 1996, so we've seen all different types of market conditions. We're active in many different types of markets, and what makes us truly unique, you take a look at our coaching staff here on the screen, all of us are active traders. We're all using our systems and our own live trading every day. That's a big difference between us and other companies out there. You can tell here from today's session. Okay, I am not a skilled salesperson. Okay, I'm not a marketer. What I am is I'm a trader. And because I'm using the system every day in my own trading, that's why I'm passionate about it, and that's why I love to teach it and work with students on a daily basis. Mark Soberman and Brian Short, the two gentlemen in the upper left-hand corner, they are the owners of Netpix. They are both full-time traders themselves as well. So again, we're all active, putting our money where our mouths are at every day with the systems that you're going to see here today. A little bit more about me. Personally, I started trading back when I was in college, back in 2002. It just seems ages ago now. I started out with the options markets for one reason. I was a finance major in college, and as I was learning about the markets, I was fascinated by the profit potential, but the problem there was I was broke. I had no money to work with, and many of you can probably think back to those college days and relate. I barely had money to pay for food, let alone being active in the markets, right? Well, once I started to research the options markets, I saw the potential there, and when I started to see, hey, I can take a trade for as little as a couple $100s, that was attractive to me because there's things that I can do there. I didn't have to have a six-figure account to trade stocks, right? So I had some early success, unfortunately, and the way I word it, the reason I word it like that, I didn't have any type of methodology or system in place, and as a result, I gave it all back. And for a stretch there, I really struggled because I was sitting there basing my decisions off of somebody else's advice, somebody else's newsletter service, and as many of you know, a very difficult approach going that route because you're totally relying on somebody else for instructions when in reality, I want to be in complete control of my trading. So it was at that point I had the chance to go down to the floor of the CBOE, or the Chicago Board of Options Exchange. There's actually people still trading down there. And I had the opportunity to interact with some of those professional traders, and I noticed immediately how differently they approached the markets than I did. They had an exact plan in place. They thought 2 or 3 steps ahead when placing their trades. Okay, they weren't waiting for an email to come through from somebody saying, hey, buy this here, sell this there. They had a strategy in place that they trusted. So I left that experience knowing I had to take a huge step back and I had to get a methodology in place, and that's when I discovered Netpix. I actually started out as a customer of Netpix years ago. Saw the power in their strategies that really resonated with me, and I saw that that was the missing piece of the puzzle for me. So they did ask me to come on staff a couple years later, and I've been helping them out ever since on the option side, helping students become successful with their trading. I have developed the Options Fast Track system, as many of you that are joining us today are probably familiar with. We're here to talk about the Academy today. So my sole focus at Netpix is on the option side of things, and that's where my main focus is in my own trading these days as well. Will I dabble in some of the futures markets from time to time? Sure, if there's a big news event like the elections last week, I might jump in and take some futures trades, but 99% of the time I am focused in on the options side of things, which you're going to see some of those strategies that I use over the next few moments. Now, I wanted to show this slide right up front. These are some of the recent results that we have seen with our trading, and you can see here, I mean, there's some pretty impressive dollar amounts here. I mean, these are all results taking one contract. I mean, we're talking about a couple $100 of profit on Apple, $50 profit on Netflix. The key piece here, I want you to take a look at those percentage returns. Anywhere from 70 to 130% returns in a matter of days. What you're going to see here over the next half hour or so, the profit potential is tremendous, and the risk that is on the line there is very limited. And that's what I really like. As a conservative trader, I love to be in a risk-defined trade. So we're going to revisit the slide here in just a bit and talk through some of the results from today. So let's go ahead and jump on over to the charts here over the next half hour or so. And we're going to take a look at some of the trades that we have closed out just recently. And let me go ahead and jump on over We're going to start out on XLE, which is an energy ETF, very popular. We've traded it now for a number of years, and the reason I want to start out with XLE, what we have seen in the energy sector so far this year is exactly what I'm hoping to see going forward in the rest of the equity market. In energy, we have seen a lot of swings back and forth. We've seen a lot of back and forth movement, whereas in the rest of the equity market, we've been stuck in either sideways chop, which we saw for most of the summer, or just the nasty trends to the upside, which can go on for months at a time. So I want to show here on XLE, we're going to start out where, when the markets do get active and swing back and forth. Let's talk through how we can take advantage of that. So this is what we call our reversal setup. We're going to talk about two setups types here today, the reversal setup and the trend trade. The reversal setup is really geared towards overbought or oversold markets. We take the approach that markets move in a stair-step fashion. It's 2 steps forward and it's 1 step back. So when markets get overbought or oversold, I'm expecting them to retrace. So we're going to take a look at the last 3 trades on XLE. We're going to go back to the first short trade here on the chart, back from a couple of weeks ago. Anytime that you see the pink dots on the chart, those represent a short trade. Anytime you see the blue dots, those represent a long trade. So the reason I got those pink dots on the chart, we were overbought on the %R indicator down at the bottom of the chart. That %R indicator, pretty standard indicator for most charting platforms. We actually use it slightly different. We use some custom settings there. But it indicates to me that in the near term, XLE is overbought. So I'm expecting it to move lower. Now what we've done with our trade calculator is we have a very specific set of criteria that we look for in a setup. When all of that criteria is met, you are going to see an exact entry point, which is this dot right here. You're going to see 2 targets down below, target 1 and target 2, and a stop up above. So now before I ever put on the position, I know exactly where to get in and where to get out. No longer am I relying on an email to come through from somebody to say, hey, we're closing out of the position here or entering the position there. I am in complete control from start to finish. Now let's take let's back up a little bit. When we take a look at this chart, what type of chart is this? Some of you may have heard us talk about this in the past. We're big believers in range charts here at Netpix. I don't like to use time-based charts in many cases for a big reason. Let's go back to what we saw last week after the elections. Okay, let's take a look at the Dow futures. We saw a 1,000-point range in the Dow futures in a 24-hour period. If you translate that over to the stock side, if you're waiting for a daily candle to close, you're potentially missing out on hundreds of points of movement back and forth, right? So oftentimes what I found in my own experience is that the time-based charts, they end up getting us into trades late. I don't want that. I want to be able to react much sooner. So this is what's called a range-based chart. In the upper left-hand corner, you're going to see it has 90 days or 70 ticks or 70 cents. What that's telling me is every candle on this chart represents 70 cents of price action from high to low. It has nothing to do with time. It could take 5 minutes for a candle to form, or it could take a whole day for a candle to form. So if the market gets very active, entirely possible for us to have a session where we have 2 or 3 candles in the same day. If the market starts to slow down, heading into next week with Thanksgiving, if the market starts to slow down and we don't get near the price action that we've seen here lately, I may only get 1 candle a day. So now I'm taking my focus off of time and I'm focusing purely on price action. Now, how did I come up with the 70-cent number? There's a formula that we look at once a quarter for our reversal charts, and it tells us the exact range that we should be using. So if market conditions change, which they probably will 3 months from now, I want to make sure that I'm using a system that's dynamic. We want to make adjustments along with those changing market conditions. That way the system doesn't completely break down every time the market changes. In a moment, you're going to see that on CMG or on Google, we're using different range settings on those charts. Big reason for that, every stock is slightly different, right? Every stock has its own unique personality. So instead of trying to force feed the same settings to work on every product, we're going to make small changes. That way we can fine tune the system to that specific stock's price action. So back to our short trade here. Once we hit the entry point, I know it seems like there's a lot going on this chart, and a lot of people are looking at this used to a day trading approach saying, okay, what if I can't be there all day long to catch these trades? The nice part about swing trading is we don't have to be there all day long. And in fact, I don't want to be in front of the charts all day long. Because in my experience, I have found the more time I spend looking at the charts, the less successful I am, because I tend to overreact to every little move in the market back and forth. All right, so when we get a setup on our chart, oftentimes we have a period of hours or potentially even days before that trade triggers in. So there's no rush. If it takes you a couple of hours to get in and check the charts, not a problem. You're still going to be able to catch the trades. So here on this short position on XLE, instead of trading the shares of stock, I came in and I decided to play the put options because of the leverage that they offered. Okay, that leverage allows me to control some pretty sizable positions with very little capital. Okay, so I came in, I bought the put options. We came down, notice it wasn't the smoothest move lower. I mean, we had to survive some bumpiness in here, right? We rallied up, moved down. We rallied up, moved down. Eventually, we hit our first target. As soon as that first target is hit, if we're trading multiple contracts, I do have the option of closing out of half of my trade there and booking the profit. Regardless of whether I take part of my position off there or not, the stop is going to move down to break even. So notice the stop goes from the full level up here, comes down to break even. That's a great feeling at that point because now the risk is off the trade. Now, ultimately, on this one here, we hit full target, which was great because I was able to close out of my position. I booked about $139 profit. That's an 81% return. Okay, 81% return, and we're in and out of this trade in about a week and a half. So you look at that initially and say, okay, $139 of profit doesn't seem like an impressive number. That's not going to replace an income, but remember, that's an 81% return. We're tying up less than $200 of capital to buy each contract. So if you buy multiple contracts in here, okay, you could buy 3-4 contracts and still have less than $1,000 at risk. Now all of a sudden you're talking about some significant profit there. Okay, that's what attracts me to these markets. Now, after I hit that second target, I close out of my position. It did something else for me. Notice we got oversold on %R. So now we followed it up with a long trade. Now we see the series of blue dots. So again, the calculator knows how to read the chart. It's going to print those entries and targets and stops for us. Doesn't mean it's going to be a robot taking the trades. It's just going to print the roadmap for us to follow. It's still going to be up to us to manually go in and place those trades. So what I did there is I came in and I bought the call option. Okay, so again, for less than a couple $100, you know, we're coming in and we're putting a position on. Now, the neat part about options, if you take a look at the return here, we had a $102 profit here on this winning long trade. That was a 33% return. Why was the return here on the long trade so much smaller than the return on the short trade? A couple of reasons. I mentioned earlier that you can control your risk with options better than any other market out there. They're very, very flexible. So what I did on that long trade, it's my approach that over the next week and a half, I do think markets are going to slow down a little bit. Because of the Thanksgiving holiday, a lot of people like to take some extended time off around that stretch. So I decided to be a little bit more conservative, and one of the ways that I did that is that I went out farther in time. By going out farther in time, I'm going to pay more for the option initially, but it's actually going to give me a safer position. I'm going to have less risk because those options, the farther out in time that you go, the slower they are to react to changes in stock price. So it still allowed me to book a profit. I still booked a $100 profit per contract here, but I did so with a smaller risk, and that's something that I was comfortable with. So it was still a really nice trade. I'm not going to complain with it at all, but I just wanted to point out that difference in the returns. Now, as much as I would love to sit here and say I think we found the holy grail, the perfect system, it's not. We're going to have losing trades along the way. In fact, we just had one here this week. Okay, in fact, we closed out of this trade yesterday. We had a short position. Again, we had our entry point that was hit. And for the first couple days of the trade, this was late last week when we initiated the trade on Friday, even into Monday morning, we still had a profitable position on. Well, we had some news come out on oil, and oil has bounced pretty significantly over the last 24 hours or so. And as a result, we ended up hitting our stop. This was yesterday. So I ended up taking off that trade once that stop was hit, and it was tricky and it was frustrating to do so because I still liked the trade here. I really didn't want to exit out of my position, but I have to keep that loss small. When those stops are hit, I've got to go ahead and close out of the position because I don't want to let that trade turn into a catastrophic loser. If I can keep my losses small, I'm able to recover much faster. So now if you take a look at the last 3 trades on the XLE chart, we've got 2 full winners and we've got a loser. I'm still up money. The system's doing exactly what we want it to do. We're winning 2 out of 3 trades. That's what we're shooting for long term. Where most retail traders struggle, the minute they have a losing trade or maybe a couple losing trades, they give up. Oh, that system's no good, it no longer works, I'm going to move on and find something else. The problem there is you never get a sample set of trades large enough to let the odds play out in your favor. And guess what's going to happen? When you move over to that new system, you're going to find the same exact thing over there. You're going to have winners, losers, and break-evens. That's part of trading with any system out there. So long term, we're looking for a minimum 2/3 win rate. That's exactly what we want to see on any name on our list. On our winning trades, they're typically in the 50 to 150% range. Our losing trades are typically in the 20 to 40% range. Right, so let's go ahead, let's take a look at another one. Let's go over to CMG here a second. I want to take a look at Chipotle because I want to continue to show you the flexibility here. I know Chipotle, it's expensive. It's a $400 stock, and many of you might be looking at that saying, I can't afford that, Mike. That's just way too expensive. Well, maybe that's not the case. Maybe there's things that you can do with options. So brings up another topic that we're pretty passionate about, and it's the whole idea of diversification. Now, I know a lot of you are familiar with the whole idea because we're all taught that right off the bat when we start to get involved in the markets. We approach it slightly different. Yes, I want to have a diversified approach with the markets that I trade. I do want to have a mix of stocks and ETFs. I do want to have a mix of sectors covered. Very, very important. But I also want to have a different mix of strategies being used. If I just buy long calls and long puts all the time, that's pretty aggressive. I'm probably going to see bigger swings in my equity curve. So what I want to do there is use some different types of strategies to help give me a smoother overall curve. What if I want to be more conservative? What if I want to be safer over the next couple weeks because of the holiday, like I mentioned? Well, what I did on this long trade, that we actually closed out of this position here on Monday, we put on a call spread. So I bought the 380 410 call spread. What that means is I'm buying the 380 call, but at the same time I'm selling the 410 call. By selling the 410 call, I'm able to collect a little bit of premium, which lowers my cost on the trade. So I put that position on for around $1,270 per spread. So I get it. It's still an expensive trade, but remember, for $1,200, I'm controlling 100 shares of a $400 stock. So I still have really great leverage there. So now all of a sudden, for those of you that may not be comfortable with $2,500 of risk buying a call option, maybe you're comfortable with half of that risk buying a call spread. Because remember, our losses are typically in the 20 to 40% range. Okay, so you're still talking about a couple $100s of risk in many cases. So it's a realistic trade to take regardless of account size. And some of these high flyers can be really phenomenal. They make some really good swings back and forth. So here on CMG, we put on our long position, came up, hit the first target pretty quickly, moved the stop up to break even. If we're trading multiple contracts, we can close out of half of our position there at that first target. And ultimately, we are going to move the stop up, regardless of whether we take half of our trade off at first target or not. We do take the risk off the trade, and ultimately, that stop didn't come into play because Monday morning, we did hit that full target. So I close out of my position. That's an $810 profit or a 64% return, and we're in and out in less than 3 trading days. Okay, so $810 in 3 days, trading one spread, I mean, that's what gets me excited. That's why I love these markets, because now all of a sudden you're starting to supplement an income right there. Just based on a couple of trades on XLE, on CMG, there's a lot of profit potential here. Now I followed that up. We just triggered into a short position here yesterday. We had our short trade print, and it actually triggered in. We're currently sitting right around the entry point here at the moment. So I came in and I put on a put spread. Okay, I still want to be more conservative, especially over the next week and a half or so, just knowing that the market's probably going to be a little bit slower. But the key here is that in the near term, we're overbought. I don't care what the overall market's doing. I don't care if the S&P is overbought. I don't care if the QQQs are oversold. I'm focused strictly on CMG and executing my trade plan there because I know, especially in today's environment, we don't see those broad-based moves like we've seen in the past. Okay, so CMG could definitely hit target on the downside with the overall market mixed, or maybe the overall market's moving higher. Okay, that diversification really plays a crucial role in what I'm doing. So now I have my targets in place. What I'm going to do here, my targets are down at 385.81 and 373.27. My stop's up at 423.10. I do not need to sit here all day and watch this thing. I can get my orders in place if I wanted to ahead of time. That way, hey, if a stop or a target is hit, it automatically closes out of the trade for me. I can do that. But I can also set price alerts on this chart. So I'll set a price alert around my targets and around my stop, and I'll have those alerts sent to my phone. I'm a big iPhone user, so if that alert triggers, it can be texted to my phone, and if that happens and I'm out of the office, I can quickly go into my mobile platform and place the trade that way. And in literally less than 30 seconds, close out of my position. That way it just gives me a ton of flexibility with time. And I'd have an extremely busy schedule throughout the week, so it's important for me to have a system where I can get in and out quickly without tying up my whole day just staring at charts from opening to closing bell. All right, so CMG, really nice position there on the upside, and now we're going to see if we can follow it up with another winner on the downside. Now let's go ahead and take this. Let's take this a step further. Okay, that reversal setup, as you can see on XLE and CMG, a lot of potential there. But what happens if the market settles into one of those nasty trends, the never-ending trends to the upside that we've seen so often in the last few years? We also have our trend setup. So if I'm going to move over to those charts here now. This is a chart of Citigroup, and this is our trend trade. It looks very similar. The chart looks very similar, in fact, because you still see the blue and pink dots, right, outlining our setups. However, the criteria that goes into those setups is very different. Now we're looking to take advantage of some of those longer-term trends. Okay, now we're starting to fill in that gap in case the market doesn't swing back and forth like we want on the reversal trade. We're still able to stay active with the trend move. So here on Citigroup, again, everything is built into the calculator. So we have our entry point, we have our two targets, we have our stops. So everything is outlined for us in real time. So what happened on this most recent trade that we just closed out of here earlier in the week, we came in and we bought the call options. Okay, a little under, trying to remember what the total cost of on my trade was. I think it was around $375. Yeah, it was. I'm trying to check my trade log here. $375 per contract. Again, I'm trying to be more conservative this week because I know the holiday's upcoming. So I'm trying to go farther out in time, give myself a little bit more cushion just in case the market does start to slow down. So in this case, I bought the call option. You could put it on multiple times if you wanted to. You could put on a call spread. But in this case, I just bought the call options. And fortunately for us, we came up and we hit that full target. I closed it out, $165 profit. That's a 44% return. And I'm in and out of this trade in just a couple of days. So now all of a sudden I've got CMG, Chipotle, which is a restaurant stock. I've got Citigroup on my list. We've got a financial. We've got an energy ETF. Okay, we're all over the map now. We're building in that diversification in the products that we trade. We're starting to build in the diversification in the strategies that we're using. We've got some reversal trades on. We've got a trend trade. We've got some long calls. We've got a call spread. We've got a put spread. We're starting to build in that mix that we ideally need to see long term as a trader. So that's two full winners in a row here just in the past couple weeks on Citigroup. We're catching the trend move to the upside. Now, the cool part about this too is I don't need to sit there and guess whether I should be in a trade or not. When I look at this chart here at the moment, the financial names have been phenomenal on the upside. There's no guesswork. I don't have any dots printing on the chart. There's no setup here, so I can take a quick look at this chart and know that there's nothing for me to do. I move on with my day. I just wait for the next setup. That's the key to getting in and out quickly every day. What about some global stocks? What about if we try to build that diversification out a little bit further, what about some of the global ETFs like EEM, which is the Emerging Markets ETF? We have EWZ, which is the Brazil ETF. Here's EEM. Let me zoom into this chart a little bit so you can see it clearer. So here on this move to the downside, this is from last week. Okay, again, everything is programmed into our calculator. So when our criteria is met, you are going to see that entry point, two targets, and stop. Oftentimes we have a period of hours or even days. This trade's initially set up on a Wednesday. It didn't trigger until Thursday. So I had an entire evening to get everything set to go. So time, we don't have to sit there all day long. I put on my put position. Came down, and we never hit that full target. You can see here this open space on the chart between the low of this candle here and our full target. We never hit that full target. But what happened here, because we hit the first target on the chart, the stop moved from the full level down to break even, And then as we continue to move down closer to that full target, notice that stop dot, that little pink dot continues to move down. We're locking in profit along the way. We're using smart money management, and ultimately we got taken out with a partial profit. I was still able to book a $108 profit. I was still able to make money on this position without hitting full target. That's the nice part about, building that diversification, having a system in place that puts the odds in your favor, because we do not have to be perfect. I don't have to win 90% of the time to make money. It takes a lot of the pressure off of my trading when we can start to build in the diversification here with the system. Okay, what about EWZ? What about the Brazil ETF? Again, I'm trying to get a good mix of products in on my list because that's going to give me a better overall equity curve long term. Trying to zoom in so you can see this a little bit better. So the most recent trade that closed out here, okay, end of last week. Nice quick pop to the downside. We're in and out very, very quickly. Typical holding time for us is anywhere from 24 hours on out to 2 weeks. That's what we classify as a swing trade, so we're not looking for a day trading approach. Could we have some day trades from time to time? We could, just depending on how active the market is, but we would much rather have longer term positions on. So here on EWZ, the reason we're able to get diversified is the system does not change. Okay, the criteria that we look for in a setup does not change. Okay, it's the same across the board. So we're able to easily switch the names on our list, get a diversified watch list of products. That does not mean you need to look at 100 names on a daily basis. Okay, and for most of our students, you're looking at a list of between 12 and 20 names. That's where most people are at. Okay, that way you can get the diversification, you can get a good mix of products without having to tie up 8 hours a day looking at those charts. I mentioned Google earlier as one of the high flyers. This is a trade that's actually in progress here at the moment. Let me zoom in so you can see it. The only difference on this chart, we're looking at a range chart of $6.43. Okay, it seems like such a random number. How do I know to use that number? That formula that we look at, it tells us the exact range setting that we should be using for every name on our list. That way we're fine-tuning the system to each name on our list. Okay, otherwise the criteria that goes into a setup does not change. Okay, it's a pretty powerful approach. So here on Google, not the cleanest chart pattern, right? Take a look at the last 2 days. There's a lot of choppy price action, a lot of back and forth, right? If I were to turn that calculator off, if you weren't seeing my entry point, my targets, and my stop, you're probably looking at this pattern saying, well, not much going on there on Google. We actually hit a first target today. Okay, we put on this position, we hit that entry point at 772.15 here yesterday. We already hit first target this morning. So if I've got multiple contracts on, if I've got multiple call spreads here, I'm able to close out of half of my position here today. It's a small profit. It's nothing huge, but it allows me to ring the register, and that's just, it's so much easier for me psychologically, and emotionally when I can start to book that profit. I don't get emotionally attached to trades. It's just the next trade in the sequence for me. So now ultimately, I would love to go up and hit full target at 792.72, but if it does not hit that full target, if I hit my break-even stop at 772.15, I'm out with no harm done. Okay, so pretty powerful approach. You don't need those home run trades. You don't need those home run moves to make really consistent income from the markets. And again, whether this trade wins or loses, it does not matter to me. I mean, ultimately, I would love to have it win, right? But what I'm saying there is the outcome of one trade is not going to impact my ability to take the next trade. It's just the next trade in the sequence for me. All right, so as long as I'm winning more than I'm losing, okay, I've got a good win rate. I'm winning 2/3 of the time, and my winners are larger than my losers. I can make money in the long run. Now, what happens if the market is not moving? Okay, we took a look at our reversal trade. We took a look at the trend trade. Those are great, but what happens if the market isn't moving? What if we just move choppy, sideways? Right, over the next couple weeks, I mentioned I'm expecting the market to slow down. So am I just going to sit on the sidelines? Am I going to cut back on my risk like I talked about earlier? Okay, both options, but I have another option here. Let's go to a chart. Let me go ahead and pull this up a second. Let's go ahead and pull up a chart of IWM. This is the Russell 2000 ETF. Over the past week or so, I mean, this chart is really amazing to me. I mean, it almost looks like a penny stock, what we're seeing here over the past week, and this is a big index. We've seen a phenomenal move to the upside. I mean, look at all these green candles here over the past week or so. We're very overbought. Okay, it does not mean IWM has to move lower, right? There's a lot of people out there saying, hey, I'm just going to go buy put options because it can't possibly move any higher. It's already been up, what, 2 weeks in a row? Okay, well, we know markets can stay overbought longer than any of us anticipate. So instead of just coming in here and buying a put option expecting IWM to pull back, some other things that I can do to make money if the market slows down. What if IWM just consolidates here and gets choppy? One of the things that you can do, and something that I did here towards the end of last week, is I came in and I sold the IWM 130, 132 call spread, and I collected around 48 cents to put that trade on. What that did for me, I know a lot of times you hear call options and you start to think bullish position, but because I'm selling the call spread, it's actually a bearish position. I want IWM to move lower or sideways. So by selling the 130 put, selling the 130 call and buying the 132 call, okay, I'm in a risk-defined trade. Okay, I want that stock to move to the downside, but if it doesn't, if it just kind of stays choppy here, I can still make money. Okay, by selling a spread to open a position, I put time decay in my favor. Every day that I hold that trade, I can make money. Now, I did this with the weekly options. I did this with the very short-term options, trying to take advantage of the time decay in the last week before expiration. So when I sold that 130, 132 call spread, let me go ahead and move the break-even point so you can see it. Because I collected 48 cents, I put my break-even point at 130.48. I do not care here whether IWM moves higher, lower, or sideways. As long as I close below 130.48, I can make money. So for me, I put this trade on anticipating IWM either consolidating or moving lower. It's basically done neither of those. I mean, it just continues to move higher, right? I'm still able to make money between now and Friday as long as we stay below my break-even point. So now by putting on a short call spread like this, I'm getting more diversification with the types of strategies that I'm using. Right? I can make money from time decay adding up. Now I'm starting to get so much diversification in there that I'm going to see a smooth overall equity curve long term. Right? Now when I sell this call spread, the most I can make is 48 cents or $48 per spread. So it's not going to be a home run trade. It's not going to be a home run winner if this trade does work for me. That's not the intent of the trade. I'm trying to scratch out a profit if IWM tries to stay sideways or just stays quiet here. So it's a way for me to react to different types of market conditions. Now you could put this trade on 5, 10 times, 20 times, whatever your account size is. Now all of a sudden you put this trade on 10 times and you have $480 worth of profit potential. Now it starts to sound a little bit more attractive, right? So there's things that I will do here in my own account where I can put on trades that will react differently to different types of market conditions, give me that smooth overall equity curve, which is ideally what I want to see in my own trading. So, I mean, ultimately, I don't know what's going to happen here on IWM. I still have this position on. Okay, I'm up small at the moment, last time I checked on it. So as long as over the next 2 days I close below 130.48, I get to make money, I get to ring the register, even though we didn't even see a move in my direction. You can't do this type of strategy with any other market out there. That's why I love options so much. So now here today, we've talked about a trend trade. We've talked about a reversal trade. We've talked about selling premium, putting time decay in our favor. We've talked about stocks. We've talked about ETFs. We've talked about different sectors. We're starting to build in that diversification, and this is exactly what I do in my own trading. This is exactly what we're going to teach in the Options Academy. So if I've piqued your interest with some of this today, but you're saying, Mike, you're talking way too fast. I cannot understand. I don't know what selling a call spread means. You know, how do I put that trade on? That's exactly why we created the Academy. Because I'm going to take you through from start to finish how I approach the markets every day. That way, once you get that foundation in place, you're going to be in full control of your trading, which is a great feeling long term. So how can you gain access to this type of diversified approach? Let me get back over to the presentation here a second. So if you're looking for that methodology, if you need that foundation in place, if you're like me years ago where you're saying, hey, I've got to take a step back here, I'm not making money, I've got to figure out what I'm doing wrong and what I can do going forward to improve my results, the Academy is going to be for you. It's going to take you from the beginning stages through advanced. So regardless of where you're at on the spectrum, if you're brand new to options, we're going to give you access to the 101 course. That's going to give you the foundation to build off of going forward. If you've traded options for years, I know we've probably got some advanced people in here today, and you're deciding, hey, what if I already trade options? I mean, do I need this? Well, we're going to teach you the Netpix methodology. We're going to teach you the Netpix approach to the market so you can improve your consistency long term. So what does the product look like? What does the program look like? You're going to have full lifetime access to all of the custom indicators that I walked you through today. The trend trade, the reversal trade, the really powerful calculator giving you the entry points, the targets, the stops. You're going to be able to download those right into your own charting platform. They're programmed for 3 different platforms: TradeStation, NinjaTrader, or Thinkorswim. As long as you have access to one of those 3 for charting, you can use the broker of your choice to take the trades with. Does not matter to us. I've been showing you Thinkorswim today because that's the platform I use personally, but if you decide to go with one of the other 2, that's fine as well. All of our favorite stocks and ETFs, we've got a list of around 50 products that we like to look at. You can use the system on any product out there, but we give you a list of our 50 favorite names. Those are names that we have seen the most success with over the years, and that really allows you to get to know the names on your list well. We're not just running scanning software all the time, just pulling up random names all the time that you've never heard of. These are very, very consistent names. Names that we have seen very good results on over the years in our own trading. And there's a lot of time that goes into the development of those trade plans, and we're going to do all that work for you. So there's no guesswork. Everything is outlined for you in detail. You're also going to have access to the complete options training. Okay, you've never traded an option before. I mentioned our Options 101 course. That's going to walk you through all the key terms and definition, what affects the pricing of an option. That way you're comfortable with those products from day one. We've also got our option strategy playbook. If you're saying, hey Mike, if you're setting up a long call spread or a short call spread, how do I know how to use those different types of strategies? How do I set those up? You're going to have an exact checklist to go to right from day one. That way if you don't completely understand the strategy, you can still get it on in a demo account. And working with hundreds of traders here this year, in fact, what I have found is that people learn best putting things into practice. We've all been to webinars and been to different training sessions, and you hear a speaker or you watch a video and it makes sense at the time, but then when you go to apply it, there's a breakdown, right? Anybody ever been in that situation? I know I have been. So what I have found is that the quicker you can put that into the information into practice, the better off you're going to be, the more it's going to sink in. Right? So in a demo account, if all you did is follow the checklist and started to follow those trades from start to finish, you're going to learn much, much faster. So that strategy playbook is going to be yours as well. Okay, the trend trade, the re-entry trade, the reversal setup, those are all yours. All the custom built indicators, as I mentioned, the playbook. All of our favorite strategies are going to be outlined in detail. So I have students all the time that will print out that checklist and just have it next to them. That way, when you pull the trigger on a trade, the amazing part is the way the markets work. You can watch a video in the evening and it makes sense, but when the market is live and you're trying to put live money on the line, how many people kind of get that brain cramp, right? You just kind of forget, what you should be doing. You've got that checklist that you can reference at any point. So again, rules in place. I can't stress this enough. That's why I keep harping on it here. It makes a huge difference when you have that methodology in place, a rule-based system. Think about any other successful business out there. The most successful people in the world are very disciplined people that have a business plan in place, and trading is no different. Okay, I know a lot of people treat trading as a hobby, or you're doing it because you enjoy the markets and you're just trying to make a little extra money. You've got to realize there's people out there that are trading very large sums of money and they're doing it full time. That's what you're going up against. So you've got to make sure you're extremely disciplined. Doesn't mean you have to be there all day long, but you've got to have a system in place that you stay disciplined to. That makes a huge difference, and it's a huge missing piece to the puzzle for most retail traders in our experience. So it all kicks off here starting tomorrow, actually. We're really excited about our 2-day training. Thursday and Friday of this week, we're going to be live 6 hours each day from 10 a.m. to 4 p.m. Eastern. We're going to be in our live room diving into this training material. We're going to teach you our systems. We're going to teach you the option strategy playbook, how to identify the proper options to take these trades with. You're going to see us applying things in real time. If we have some trades set up and trigger in for us the next couple days, we'll take them right in the room. That way we can really start to apply things quickly. And in my opinion, between now and the end of the year, we have a window that's really great for us. Historically, we've seen some really nice results between Thanksgiving and Christmas. So it's just a perfect time to get the system in place that you can use right away. Now, if you can't attend live, I know it's we're running out of time, and if you've got things going the next couple of days that you can't rearrange, we're going to be recording it from start to finish. Those recordings will be posted on the owner's website. That way you can review them over the weekend or over the holiday or down the road whenever you need a refresher on a certain topic. Those will be available to you on the owner's website. Now, once the 2-day training is done, okay, the program is actually just starting. Okay, we're going to be there every step of the way. We've also got weekly training. Every Wednesday, we're going to be live in the markets. You're going to be able to log back into our room, ask questions in real time, watch us trading in the markets real time. A great way to really start applying what you're learning with somebody there willing to help. Okay, so we'll be trading live. If anything sets up during those sessions, we'll be taking trades, and then we'll be reviewing a lot of past trades as well, just to make sure everybody's clear on how to trade the system from start to finish. Now, we've also made a change here recently based on feedback from students. I've had a lot of people that have said, you know what, Mike, I can't attend for an hour in the live training room. It'd be great if you could have more short videos that I can watch. If I've got 15, 20 minutes in the evening where I can sit down and watch a video. So a couple times a week, we're going to be releasing those videos covering specific topics or specific trade examples. That way you can get in and just a few minutes really stay up to speed with what we're doing in the markets. So you're going to have access to that on a weekly basis as well. All of that's going to be found in the Options Academy Owners Club, the weekly training room, all of the updates, all the market updates, the indicator updates. All of the ongoing training and support from us is going to be yours. Right? There's no monthly or annual fees to use the system, as we'll talk about in just a second. We've also included our trade lab. So what we're doing with our trade lab, it's not meant to be a signal service, but what we're going to do on the owner site, as I start to identify trades, like that the IWM short call spread, or if we try to put on an iron condor, for example, we're going to put it in the trade lab so you can log in a couple times a week and see what we're doing. Okay, get those trade ideas for some of those advanced positions. That way, if you don't have a ton of time throughout the day or throughout the week, you can come in and get those trade ideas very quickly. That's a huge advantage. It's a really nice feature going forward for those of you that really want to ramp up your trading. So the strategies that we're going to post there on the Trade Lab, there's going to be a wide range. There'll be beginning strategies. There will be some advanced strategies as well, some advanced trades that we'll post on there as well, because we really want to get a good mix of trades based on what the market's giving us at the time. So let's go back to that slide that I talked about earlier. Right, I mean, you can see the results here. You add to this list what we just talked about today, and we're talking about thousands of dollars of profit here just over the past month or so. A lot going on in the markets, and we've talked about trades that could benefit from all different types of markets. Bullish, bearish, and neutral markets. There's a lot of things that we can do. Okay, remember, all of these returns are taking these trades with one contract. So if you've got a larger account size, you can start to do the math in your head. There's a lot of profit potential here. So let's just recap what you're going to be receiving with the system. Don't get intimidated by these prices. We are not going to charge you anywhere close to this, but we just need to put some value on everything we've talked about today. So the full trading system, all the custom indicators, that's a $1,500 value. The 50 trade plans that I mentioned. We've done a lot of hard work on our end to create those plans. Hundreds of hours go into the development of those trade plans. You're not going to have to do that on your own. We do that hard lifting for you. That's a $1,300 value. The live 2-day training coming up this week, I mentioned, that's a $1,000 value. The 101 course, the Trade Lab, the weekly Q&A sessions, the Owners Club with the live training room. That's over $6,300 worth of content here that we're including with the system. But in fairness to you guys, we know as retail traders, you can't have all of your money tied up in education and systems, right? You've got to have that money to trade with. So we're not going to charge you anywhere close to that. In fact, it's going to be a fraction of this because we want to get you in as quickly as possible, get you the education that you need, and still have a good amount of capital to trade with. And we're also going to sweeten the pot a little bit further for you. Okay, we're going to include 2 one-on-one coaching sessions. I know this, for those of you that are just starting out, you want that hand-holding and you need it. I was there at one point. I needed somebody there to walk me through some topics and review trades with me. We're going to include 2 one-on-one coaching sessions. We're also going to knock off $200 off the price here for joining us today. Now, I realize everybody's busy. You know, you're getting ready for the holiday. The market's been very busy the last couple weeks. So for taking time out of your day, we're going to knock off $200 off the price. And then we're also going to upgrade everybody to the Lifetime Owners Club. Okay, we typically charge $97 a month for access to that Owners Club on a monthly basis. We're going to upgrade everybody to the Lifetime. That's almost $1,200 of savings in the first year alone. Okay, so just a really great value there. Really nice offer that Netpix has put together. So what is your investment? What does it look like? I mentioned I wasn't going to charge you anywhere close to the $6,000. Well, if you're a fast track student, some of you might be familiar with the Options Fast Track program. If you've already purchased that program and you're looking to upgrade, you can get started for as little as $465 today. If you're brand new, if you do not own one of the products, you can get started for $695 here today. So we're trying to make this as accessible as possible for all of you today. So again, the webinar only special, free upgrade to the Unlimited Lifetime Owners Club. That's a $97 a month savings. Again, it's only for the webinar attendees here today. So if you're an Options Fast Track student, okay, you can get started. It can be a one-time payment of $1297, or we can split that up into a payment plan option, 3 monthly payments of $465. Think back about the results that I just showed you here today, guys. You guys can start to do the math in your head. The system is going to pay for itself very, very quickly, right? And then you're set up for life. There's a lot of things that you can do with the system. If you're brand new to Netpix, okay, if you do not own the Fast Track program, you can get started for $1997 or a 3-month payment plan of $697. Okay, so either way, you're set for life. There's no ongoing monthly or annual fees. I know a lot of other products out there that they continue to make those monthly charges. You're not going to have to worry about that. You're going to be good for life with us. Now, we also want to take the risk off the table for you. We know there's a lot of other systems out there. What makes us different? Hopefully, you've seen some of what makes us different here today in the presentation. We're also going to take it a step further and include a 60-day performance guarantee. What that performance guarantee states is you need to download the indicators, go through the trading materials, and take 5 trades. It could be on a live account or a demo account. It does not matter to us. If you're not up money at the end of those 5 trades, we will issue a full refund. Okay, we're confident enough that the system works because we've used it in our own trading now for years. We continue to see the results, and that's why we know if you take the time to learn the system, go through the training, and take a couple of trades, you're going to see the power of the system, and you're going to make money very, very quickly. So how to enroll? Here are the sign-up links. If you are brand new, the link for you is going to be the netpix.com/OA new. If you're a Fast Track student, the link to sign up there is netpix.com/OA family. So Will is going to get those links into the chat box as well. So if you're ready to go ahead and click on those links, and we will reserve a seat for you for the training. Again, starting tomorrow. So if you've been on the fence here, I know we've had a lot of emails and phone calls come in the last few days with people interested. The clock is ticking as our training kicks off tomorrow at 10 a.m. It's not too late. We have not kicked anything off yet, so you can still join us, and we'd love to have you do that here over the next couple of days. Now, if you're a TradeStation user, this is pretty cool too. I mean, you can get started, and have your full cost of the system reimbursed to you. What they're willing to do is give you the full cost of the system refunded to you through the form of a commission rebate. We all know commissions, necessary evil, right? We have to pay those commissions to be involved in the markets. Well, TradeStation is going to say, hey, we realize that if your students are going to go through this academy, if they're going to have the system that's going to put the odds in their favor long term, they're going to be a long-time customer, and we're willing to pay for those long-term customers through the form of these commission rebates. So you can feel free to contact us for more details on that if you're a TradeStation user. Pretty phenomenal deal there. Now, if you have any questions, I know there's been some questions come in. I know Will's been helping me out answer those questions, so I appreciate that, Will. I'll get over to those in just a second. If you're hanging on to a question, now is the time to get that in. And again, I will leave this up on the screen. These are the links that you can either type in to your browser, or you will see the links in the chat box as well that you can click on to go ahead and sign up for the program. So let me go ahead and move on over to questions here for the next few minutes. Again, I know a commonly asked question, what platform can I use this on? The indicators are programmed for TradeStation, NinjaTrader, or Thinkorswim. As long as you have access to one of those three for charting, you can use the broker of your choice to take the trades with. Pretty common brokers, TD Ameritrade, Interactive Brokers, and Options House are probably the three most popular that our students use. But again, if you've already got an account set up with somebody, perfect. That's not a problem as long as you have access to one of the three charting platforms that we support. Steve, how do you figure whether to do longer time frames? So, Steve, I'm guessing you're asking whether we're going to use the trend chart or the reversal chart. How do you know which one? We're going to talk through that in the training. And what we like to do is we want to make sure that each person has a diversified list of products and a diversified list of strategies that they can use based on your specific situation. There's no cookie cutter approach here because everybody has a different account size and a different risk tolerance. So what we have different modules that we can set up, and we can work with you one-on-one to say, hey, based on your account size and what you're looking to accomplish, here's the charts, here's the products that you should be looking at. Okay, that's why we can really fine-tune things to your specific situation. Are the indicators proprietary or are they included with the TOS platform? They are proprietary, so after you sign up, you're going to receive login details to our owner's website. That's where you can download the custom indicators, get them into your own platform. And if you need help with that, we can always set up a session where we can log into your computer remotely and get those charts set up for you. Junior, how far do you go out with the options? We talked through that in the training as well. There's a very specific set of criteria that we look for when selecting the options. A lot of people will select the option based on what they can afford. So in many cases, people are going to the weekly options and trading the out-of-the-money options, not knowing that they're cheap for a reason, and the reason being they have a very low probability of success. So we're going to walk you through how you can put on trades that will, give you a good risk profile, but also give you good odds of success based on what we're looking to accomplish with the system. Can the dots be changed to lines and labeled as targets? Yeah, as Will posted, it depends on your charting platform. You can change the colors of the dots. You can change how they appear on the chart. We just want to make sure that chart stays as clean as possible. Remember, we want to get in and out quickly every day. So if we start to add notes on the chart and labels on the chart, it can get very confusing and very cloudy quickly. I want to make sure it's as clean as possible so when we come in, we can come in and quickly, in a few minutes, know whether there's a trade there or not, where to get in, where to get out. We really want to make sure that it's as clean as possible. Suzanne, in the Williams percent curve of XLE, there was no overbought signal, but you still put the trade on. Okay, so what we're going to walk through in the training and what you'll see is that when we get a move above or below the extremes on percent R, it doesn't just need to stay above that upper boundary to remain overbought. There's actually a sequence that we look for before we lose that overbought condition. And all of that is programmed into the calculator. So on XLE, the calculator knew we still had the criteria that we needed for a short setup. And we walk through all of that in the training, so there's no guesswork. You're going to know exactly why that is a setup or why it's not a setup. You'll have access to all of that here in the training. Is it possible to get a stock feed through Ninja and how? Yes, it is, Donald. For NinjaTrader, we recommend using Kinetic for your data provider. If you go to their website, they do have a stock and ETF bundle. The data typically runs around $55 or $60 a month for the data. inside of Ninja. If you're a thinkorswim user, the nice part about that is they don't charge for data, they don't charge for their platform. So we have a lot of students that will do it like this. They say, hey Mike, I've got an account with Scottrade, or if I've got an account with E-Trade, what do I do? The best way to do it is to open up a cash account with TD Ameritrade. They own thinkorswim. If you open up a cash account and fund it with $50, it doesn't have to be a margin account. You don't have to go through all the extra paperwork there because you're not going to be using the account to trade with. All you want it for is charting. If you open up that cash account, put $50 in, that's going to give you lifetime access to their platform. There's no monthly fees for data or anything like that, so you could use the platform for charting. And then if you had an account with E-Trade, for example, you just go over to E-Trade and place the trades there. So just a way to save the money so you don't have to pay the $60 a month for the data inside of Ninja. So easy way to save some money there. And Junior, you did sign up a week ago, so perfect. We look forward to working with you. And again, the training starts tomorrow. You should have received a couple of emails here the last week with details. And if you have any difficulty getting into the room, let us know. We'll be in there tomorrow at 10 a.m. Lawrence, on TD, do they have often an arrangement for helping fund you? No, so obviously you're going to have your own funds to trade with. There's some things that you can do to save on the cost and to negotiate commissions and things like that, but you will absolutely need to have your own capital to trade with. And does the deal also include Ameritrade members? Yes, TD Ameritrade does own the thinkorswim platform, so you'll be all set there if you've got an account with TD Ameritrade. All right, so I think I got to all the questions. If there's anything else that has come in that you need more details on, let me know. Mark, as a current owner, can I view attend the training for tomorrow's sessions? Send me an email, Mark, to mike@netpix.com, and we'll get you more details there. And Suzanne, let me know. You can always send me an email to mike@netpix.com, and with any questions. If we need to set up a phone call, I'll do my best here to get back with you right away this afternoon, and I'll get the details that you need or any questions answered. So again, mike@netpix.com is my email address. All right, so for those of you that already signed up, again, welcome to the Academy team. We look forward to working with you here in the coming months. Again, the training does kick off tomorrow, so we'll get you in the room here tomorrow and Friday and get you ramped up, ready to go here for the end of the year. So for the rest of you, thank you for taking time out of your day to join us. Hopefully you saw the difference in how we approach the markets here at Netpix. Enjoy your afternoon. Enjoy your holiday upcoming next week, and we'll talk to you guys all again very soon.